Welcome to PM Express Business Edition. They are described as the pulse of the economy and everything about the economy. Well, I'm talking about commercial banks in Ghana. And then there is the debt exchange program. But in all these things, how are these banks going to survive? Especially when it comes to extension of credit to businesses, the larger economy, and how they are going to fare in 2023. Let's talk about the fact that some of them, their profits will be wiped away, liquidity will be challenged. But that is when businesses may be worried about this development. How can banks survive in 2023 in the midst of a domestic debt exchange program? Well, he has seen it all in the industry. He's chaired, he's been an MD before, and now he's into the private sector as well. What does it make of these developments, and how can these commercial banks survive? Mr. Alhassan Andani is a private man now and chief of Fiscal and a former president of the Ghana Association of Bankers. Thank you so much, Chief, and it's right to call you Chief, right? Sure. I'm not wrong.
Yeah, absolutely.
How are you doing?
I'm doing great. I'm doing great.
Some would say interesting times.
Interesting and difficult times sometimes. Maybe you can just say frightening times. Mm-hmm.
Yeah. How is it? You are now into more of a private consultancy, How easy has it been for you? How challenging, or maybe will I say more relaxing for you?
Now, I'd say it's been challenging, and I set it up like that. First and foremost, I wanted to get back to my traditional area and play a developmental role. Mm-hmm. And I think that is taking a bit of time, a bit of thinking, and keeping me busy. But of course, the old soldier, we say in our local language, is never far away from the barracks. Mm-hmm. So I'm very, very much immersed in the economy and geopolitical issues, and also trying to set up and run an enterprise development firm. So
I see. Quite busy. And Mr. Andani is Mr. Andani, but some would say that you've now gotten back to the space where you see yourself as a private person in terms of carrying out your transactions and all the rest and all those things. Has it been that easy for you? Has it been that challenging, if I should go back to that question? Or listen, I think it's been more relaxing for me because now I can independently take certain decisions that I don't have to go to a board to justify. I don't have to go to a regulator to justify.
Yeah. Well, yes, to the extent that you can be independent, but again, you still carry a huge reputation of yourself and also your previous employees and everybody else who had some level of confidence in you. So yes, relaxing because I choose my stress. And in my previous jobs, I didn't have to choose my stress. Everything that came to you, I had to deal with it. But now, at least I can choose and handle the stress that I want to choose.
You don't still see yourself as a private person because the baggage of a former MD, the baggage of a former president of Banks Association, also some senior statesman. So yeah. You're so cautious about everything that you do. You're watching your teeth, you're dotting your eye because, listen, I can't get it wrong because it is coming from Mr. Andani.
Absolutely can. It's a privilege to lead. It's a privilege to be given the opportunity to serve. And when you've done what we have done, for so long, you have a number of people who look up to you, and therefore you must represent them in your thinking and the way you do things. Domestic
debt exchange program. Yeah. Some would say the biggest animal in the room.
Yeah.
For you. Some of you, some would say that for people like you, you knew that we're getting there looking at that current challenge. What do you make of this development?
I think it's a very difficult situation and could be a positive turning point for Ghana if we face up to the issues that brought us here. If we really face up to the issues that brought us here and to say never again, and take the right steps, that could be a truly positive turning point. But if we bury our heads in the sand and try to hide all the issues that brought us here, just placate it and get along, we will get back to it. And what now and then happens is when people become despondent and disbelieve leaders and disbelieve institutions, God only knows what kind of nation that then becomes. So we're actually at a very interesting point, as I said. Depending upon how we face up to it, it could be a very positive turning point, and we'll take concrete steps and get ourselves educated as private individuals, institutions, and particularly government, and say never again, and recalibrate our actions so that we can move forward strongly. But if again we placate and refuse to tackle the real issues, we will create despondency.
It's good you've used the expression never again, because the last time I engaged you, or even engaged you as president of the Bank Association, I remember I brought up this issue about the banking sector cleanup and the never again thing. But it appears as a cycle. We've gotten into a similar challenge that many would want to draw the linkage or the links to the banking sector cleanup.
No, it's sad that it is the opposite of the banking sector cleanup. So the banking sector cleanup, if you want to say, were private individuals and private companies licensed and trusted by the clients and also the regulator to do the right thing. And those institutions that got cleaned out did not do the right thing. But there was still some integrity in government, there was still some integrity in the central bank, the regulator, and therefore they exercised what was duly their responsibility and did the cleanup. Now what is happening here is the government and the central bank, who are supposed to be the center of the financial infrastructure, that's where the cage is being rattled, and that is where the danger is. So this is not the other way around. The other way around was, it's like the parent correcting children. Now the children are frying up and the parents are frying up. That's quite a tough.
Some would say that one of the real reasons why this discussions was extended was because the concerns that the commercial banks had about it, and that might be the factor, not what other sectors might be worried about this. But for you, do you think that there's really an option for these commercial banks? And some are saying they play a very significant role in this economy, that if things are not managed well, we could dip so low that we should be talking about recovery in the next 5 or 10 years.
You mean concern of commercial banks around
the consent,
program?
And the consent.
No, it is very, very well founded, and I think it's much more fundamental than that, because I've spent all my life in banking. Since 1984 to 2022 I left, I spent my life in. And the piece of paper everybody saw on was Ghana government guarantees. And I often, unfortunately for most of my career, I worked for foreign banks, and therefore have had to face boards and my capital providers to say, Ghana as any emerging market has often short-term challenges. What works for Ghana is long-term credibility. Long-term credibility. We would come round and do the right thing. Now, and we always did until now. So yes, all the short-term challenges we had in the past, we resolved because we retained long-term credibility in government and in our systems. But at the moment, with what is being faced, is the long-term credibility of the government and our financial system, which is being challenged, not even a short-term problem. So the banks are surely concerned because, number one, that paper, bonds, they are all issued with the approval of Parliament and therefore carries the seal of the state. Now, without a state of emergency, without any clearly articulated force majeure, you know, it is just declared non-performing. That is worrying. So park that one day. And government is the largest player in the macro situation. Now, then you come back and look. So you and some of the investments banks make in this are part of the statutory requirements that this is areas that you are recommended to park deposits just so that you can keep the system safe, because government is riskless. Now, so if that risk bubble bursts, then come back to your risk book and say, any other exposure I have in my book that has a direct and indirect receivable from government has to be impaired. Now, every risk that you assess has a balance sheet implication. So all of that now washes through and your capital is wiped off. So that's why the banks are worried. And remember that the ratio between equity, which is the owner's funds, and depositors' funds is very large. Depositors largely are responsible for banks. So if the business you've done, largely with depositors' money, is severely impaired, think about the liquidity, which is the depositors coming to say, we want our money back. How do you handle it? So it's not an easy time now to be sitting and running a bank.
Let me come back, and in your submission you spoke about regulatory requirements and all the rest, and some would argue, in trying to play the devil's advocate, that has the chicken come home to roost in terms of these commercial banks? And I'll mention the name of the bank that we had in this country, where a bank just placed all its funds in treasury bills, government bonds, and was seen as the most profitable banks. Some are saying that move away from the regulatory requirements. Some of these banks were maybe just being lazy, placed everything in government papers and were doing so well. They were not that innovative to spread their placements and even help the growth of businesses. Now it's come to hit you.
I think if we project that argument, we are actually oversimplifying the issue. In a normal market, every risk taker chooses risk. So where we are right now, it's not about profitability. In a normal market, it was the view of those banks or institutions that, let me put the money in the riskless area because maybe I haven't got enough skills to deal with the risky areas. But always the risky areas gives you more money. If you actually deal in the real sector where you are taking corporate risk, personal risk, you make more money there. Riskless doesn't pay you that much or should not pay you that much. So that was a commercial decision. What we are faced right now is almost an implosion of the financial system. So profits is not what we're dealing with. Right now, what banks and the economy should be looking at is saving the capital and saving the liquidity of banks. I don't think any bank managing director would now be sitting down thinking about profitability. They should not. They should just be thinking about capital preservation and having the minimum capital to continue to be in business and having the liquidity to support all the deposits that they've taken from clients. It's not about profitability.
So, Daniel, I asked that question because of when you look at some of the banks, the level of exposure in these government papers, and there might be the moral argument being raised that if these banks were even advancing these funds to support well-established businesses, maybe this exposure would not be that bad that now they are in a crisis.
Well, think about it. Why did the government put out those the borrowing requests to which these banks responded? If even there wasn't domestic capacity to satisfy the government for borrowing that, if it was being used properly, was supposed to accelerate this economy. And remember I said the government is the largest part of the of the economy. And therefore, if you're borrowing and doing right, then you can spur private sector growth. So everybody needed to use borrowed funds in a very responsible manner. But having said that, the issue facing us now is not how much money you made in the past. It's just how do we preserve an economy going forward?
You think
how do we preserve the economy?
We still cannot raise the issues about how some banks did the operations in the past, that the shocks now could have been lessened.
So look, maybe what I didn't complete was to say, if government didn't get the money that these local banks provided them, maybe the alternative would have been to go and borrow a lot more. And tell me, the situation where we are, domestic borrowing versus external borrowing would have been sunk long ago. Because imagine the exchange translation by now. So somebody needed to satisfy that government. And we expected the checks and balances in Parliament and other fiscal institutions to say, look, if we're borrowing this amount of money, it should be used in a manner to spur on the economy. But if it wasn't, are you going to blame the lender because you said you're going to build a house and I lent you the money and trusted you, given that you're a AAA person, I didn't need to follow you, and you still didn't build a house. Sometimes if you're a DDD, I'll follow up and make sure that you build a house, because that's where my security is. But if you're a AAA like a government, I trust you'll do the right thing. So if government was provided funding, call it from banks, from individuals who've put bonds in there, and they didn't use it well, are you going to blame the lenders because at the time government paid a high interest rate for it? I think we'll miss the point significantly. And that's why I'm saying we probably are losing our long-term credibility. As for the recurrent short-end problems, like any other developing country, government or Ghana government, Ghana will have that. But long-term credibility is what we are threatening now.
That is what you're worried about?
That's what I'm extremely worried about, the long-term credibility.
Do you think that, and let's come to confidence in the financial and the banking space. And I remember I spoke to lawyer Fosudote where he said that in the 70s, some people who had a certain amount of money were being chased. We came to the men's gold era and all the best bank sector cleanup. Just when we were coming out of it and confidence was being restored in the banking space, we have this challenge. For somebody who spent most of his entire life in the banking industry, are you worried that this is a dip for that confidence in this space where people can take about 100,000 or somebody or a Joe Mansa who sells at Mantimankebi, put together her sales, her daily sales, carry it to a bank, and she can go and sleep? We've gotten to that point where it's a big challenge, and it's going to be a big challenge.
We've got to separate. Up until the government said they were defaulting on their debts, no bank had a challenge with Ajua Man says 100,000. No bank had a challenge. But what we're saying is that when you have gathered all the financial resources, deposits and investments from individuals, and you are laying it out into the economy for growth, that's because that's essentially one of the critical rules of banks. One of the growth engines is government itself, plus companies. So up until the time that our most trusted borrower, which is government, said they could not pay, no bank had any problem with sending money or deposits in the bank, no. So that's why I'm saying that long-term credibility has to be restored in government very quickly, so that what you've just, the scenario you've just painted will not happen.
You don't think that confidence in the banking sector will be hit badly?
At the moment it is. At the moment it's very hit. I mean, banks have asset management companies that, have now facing an existential threat, and also it's just, you've got investors who came, or depositors who came through you and bought government bonds, and for them, once they came through the bank, maybe that instrument is actually for the bank, but it is for government. So the confidence level is, shaking. But I'm saying the infrastructure, the setup of the banks to properly superintend wasn't what was dismantled or disturbed. What has been disturbed is the overarching impact of government.
What can be done to lessen the confidence hit? Because again, the fear is that if all these persons are not going to bring their money to the bank or even investment, it has impact on liquidity for even some of the banks themselves. The ability to on-lend to Kojoakwa somewhere in Abosuoka and all the rest. What can be done right now to lessen or try and absorb or manage this confidence issue?
At the moment, the financial setup is not, I wouldn't say it's not dismantled. The lender of last resort for the banks is Bank of Ghana. Bank of Ghana has not told banks that against your deposits and customer liabilities that sits with you, if people will not be able to provide it. And I don't think at the moment any bank is turning away clients from taking their money. No. What's happening is, so just coming back to your point, as for the confidence, the way the banking sector is structured with the Bank of Ghana as the overarching regulator, that is working perfectly. If banks still need liquidity support within the rules set up, they will be provided that. No bank has been denied that yet. I haven't actually come across a scenario where banks have turned clients away from their accountants that they can't pay their money. No. What's happening is the credit environment. And the credit environment as presented to us by government and its implications directly on government borrowing and indirectly on other agencies that are dependent on government for their business and to whom the banks are exposed. That's where we are worried about. So the depositors and how the banks manage the deposits and how the central bank protects that is intact, let's say, at the moment. We're worried on the credit side. And the credit side, the biggest creditor or the biggest borrower, in this case, the central bank or the government of Ghana is stressed. And that is what is, if we don't properly manage it, can flow back.
The contagion effect.
The contagion effect.
Already before even this challenge, there was an issue with access to credit and even cost of credit coming from COVID-19 shocks and all those things. There are some people out there who are worried that well, this whole debt exchange program is still work in progress. Access, cost of credit would be a huge challenge, and also NPLs. But let's first start with the access and even cost of credit.
I think at the moment, as I said earlier, banks should prudently look after capital, and they should look after liquidity. And liquidity primarily to respond to client deposit withdrawals. I wouldn't, if I was sitting there, I wouldn't be, at the moment, because of the poisoned economic environment, be making out credit. Unless, you know, of course, there are always some bright spots.
You'll be prudent right now to be very tight on credit. That's the prudent
yes,
thing
because
to do.
I need to retain liquidity to respond to the earlier point you made. Keep the confidence at the depositor level high. Because if we lose that, everything would collapse.
So credit will be badly affected.
Yep, it's not badly affected. It probably would not be as available.
It will be the
as
wise
it
thing. If I'm operating a George Wiafe bank right now with a tier 4 banking category, listen, it's wise to hold on with a little bit of liquidity you have rather than giving it out. That's the wise thing to do.
I'm that liquidity on behalf of the people who gave me the liquidity in the first case, which is the client, the depositors. You see, sometimes when we talk banks, I always talk about banks as the investors, the equity people. Their money in that bank is not that big. What is there is the depositors, the Kojomanse, and those depositors. That's what it is. So your first focus is to protect them. And in normal markets, if they are happy, you can translate the money into credit. As I'm saying, it's a credit element that is now poisoning the market. So, and also, if you actually came to me to borrow, and I would say, but George, interest rates are now sitting north of 35%. What kind of business will give you a flow that is enabling you to pay 35%? You must be looking at a business that has a gross return of about probably 50%. And in a business with a gross return of 50%, let's look at it again. So it's about taking a second look at, you know, what people borrow for and to advise. And very, you know, with this kind of environment, those strong cash flow, safe cash flow environments that will give you that kind of interest expense and also still give you a profit will be far and few in between. So,
Mr. Andani, I'm an AAA rated business. I come to Andani Bank. I'm looking for $1 million Ghana cedis or 3 million Ghana cedis at this time to do business and all the rest. Are you going to lend me the money?
It depends. It depends.
With all the challenges that I'm going through,
what
about 10 million Ghana cedis right now?
My number one preservation will be capital. Number two is liquidity. So I'll go back to my liquidity management framework and say, in our model, how things come back and how things go out, and say, do I have any space to do this if I have to do it? If there's space, I'll do it. But my number one allocation will be my depositors. Make sure I can protect my deposit and the bank's own internal maturities which they have to pay.
Non-performing loans, another big challenge as well. Looking at the struggles that the economy is going through, that will be a big challenge for the banks this year. Straight
away. And that one of it is a direct flow out of government default. So you will have contractors, suppliers. I always bring you back to the fact that government and government-related institutions are the biggest operators in the economy. So if they are unable to pay, and they all have exposures in the bank, they'll be non-performing.
Let's come back to the domestic debt exchange program. I know it's work in progress. The government is trying to fine-tune stuff with the banks and all the rest. Is there an alternative for these commercial banks in terms of how they try to work out whatever assurances that the government is giving them, what they're putting on the table? I mean, some other interest groups are putting pressure on the banks that don't accept it. You know, some are saying they accept it, some are saying that push for more. Do the commercial banks have an option?
You've lent the money. So once you lend money, you lose control. And especially when you lend against sovereign guarantee. It's not like I lend George Wiafe his money. If I lent money to you and you didn't pay, I would come straight for the house. And I know you live in a beautiful area, so I would have sold it and got my money. But you lend to government against a sovereign guarantee, which is a piece of paper. So you are stuck. So it is not an option. It's just how do I ensure that this money that I've let out, which I program will come this way and it's not coming, how will it affect my obligations to the depositors, to my other businesses? That's where the issues are coming from. So it's not, the banks would wish that this was a dream and everybody would just get up and it was a bad dream, but it's a reality. So they would be looking to the borrower now, which is Ghana government, and say, look, if you just defaulted because of the size of my exposure to you and also related distance, my bank is gone. Indeed, if the banks were to really risk classify their bonds and related exposures and of course wash it through their income statement and back onto the balance sheet, very few banks will have any capital left to operate. And is that what we want? So it's not negotiation with the bank really. For me, it's about what kind of arrangement do we put in place that banks that were observing the statutory regulations and Bank of Ghana requirements, which were sound on capital, on risk management, on liquidity reserve, they were sound until this external huge contagion of government that came in. So the threat to banking is not because they managed their book wrongly. The biggest borrower is going belly up. So I would think that the question should be the answer. Is there any other way government could handle that debt without imploding the internal financial structures? That's, for me, a much more fundamental question. Is this the only way? I don't think this is the way. I think there are other ways.
Andani Bank was the 25th commercial bank in this country.
Yeah.
With the current proposal on the table, are you going to accept it?
It depends. If I roll it back and still have a business, this is
from where it's structured now, some of the banks are saying that they don't have a business.
Well,
will Mr. Andani Bank accept this 5% being offered?
Andani Bank as a shareholder, if I were the shareholder of the bank, I'll go back and say, sorry, you can't put me out of business. I'll go back to the borrower and say, you can't put me out of business. That's the shareholder's decision. It's not the management's. The management is there when there's a balance sheet and deposits and clients to deal with. But when you have wiped me all out, it's no longer. The manager will just go and show to the board, to his the leader will just show to the board and to executive shareholders to say the implication of this is that my net loss is, let's say, 1 billion. My capital is 400. My reserve is 200, so capital reserves wiped off. I'm in a negative position. I don't have a bank. And the first person to act will be the Bank of Ghana. Bank of Ghana should come and close your doors and protect depositors. That's just it. That's the normal flow.
Would Mr. Andani Bank ask for a better proposal to ensure that your assets are protected, your liquidity is protected?
Yes.
With respect to what is on the table right now?
Yes, because as I said, I have a sovereign paper. So I'll go to, and the sovereign is subject to legal action. I wouldn't sit down and let any agent in the economy. Yes, the government is, he owns everything, but I'm also an independent company that has set up my business with my own capital. So if your action is taking off my capital and I don't have a bank, sorry, I'll have to go to seek redress.
From what we saw earlier on in terms of the communication between the banks and the Ministry of Finance, the individual banks are supposed to go to their shareholder and to seek their blessings on it. Would you give your blessing to the current deal on the table as a shareholder?
It depends upon what the
offering 5% on the bonds for 2023.
The 5%, 15%.
Is it a good deal?
It will all be modeled into a financial model for me. And I look at it and say, do I still have capital? If I don't have capital, do I have the capacity? Because Ghana is not going to end on debt exchange. If I don't have the capital, or if the bank has no capital now, I'll ask myself, do I have the potential to introduce capital so that I can still be in the system? If I have, and still believe in the future, yes, I will recapitalize and stay in. But if I don't, first of all, I have to protect my commercial judgment which I thought was right until this. Think about it. If it was any other corporate borrowing and crashing a bank, what would you be asking? What kind of collateral did you take?
They'll ask for a better deal to be put on the table.
Yes. What kind of collateral did you take? What is it? What are the remedies? So that's the thing. So if I have a scenario presented to me as a shareholder that says that this action is wiped you off and you will not have a business because from these numbers, the Bank of Ghana will be the next on Monday to close us down. Would you sit down?
Would you, as a shareholder, tell your bank that go back and get a better deal that will still keep me in business? Because of what they have presented as a shareholder of one of the commercial banks?
Yes, I'll say that no, I don't accept this.
You should go back and push for a better deal.
I say I don't accept it. No, these are the exposures that you reported to me at the last board meeting. It is this one that is bringing me down. Sorry, I can't accept that to happen. So go back.
As a shareholder, are you satisfied with the regulatory and the fiscal proposals on the table to support you as a shareholder in these commercial banks? I mean, they're talking about financial stability fund that you can go to, all those things. Are those things, again, enough to ensure that your capital is protected as a shareholder in any of these banks?
Yeah, look, when we come to this, we should be careful to separate the role of the Bank of Ghana, which is also impacted by this debt exchange program anyway, and the government, which holds these debts. Otherwise, we'll miss the point. The institution with the primary responsibility to protect the financial system and everybody else is the Bank of Ghana. They also bought bonds like everybody else. Yeah. So we should actually not be mixing the two. We should be coming back to government and say, this debt that you owe, and which carry the reputation of the entire country, if we renege on it in a manner that destroys the financial system, which is a nerve of the economy, the main nerve of the economy, what have you achieved? So the question should be going back and asking fundamentally again, is that the only way to go? Because whoever you want to help, whether we want to, and first of all, we should be looking to help ourselves. Do you want to, as you easily say, cut your nose to spite your face? Yeah. So let's separate Bank of Ghana, because what Bank of Ghana is trying to say, okay, look, in a very risky environment like Ghana, ordinarily Basel says capital adequacy is 10, but I would say no, it's risky. I'll keep it at 15, or I'll keep it at 13. So it was just being abundantly cautious. So they're probably prepared to abandon that caution and to let banks operate what I would say closer to their most acceptable risk line. That's what they are trying to do at best, to keep that system integrity. But don't push it. If you push it, they can't do anything more than
Some would say that, Mr. Andani, as a shareholder of any of these banks, your concern is the risk that your bank is exposed to. And some would say that, okay, if you express these concerns, there are certain buffers that are being put in place to ensure that your concerns are kind of halfway addressed. And that's why I'm asking yourself, is that as a shareholder, if I come back to you based on what has been presented, are you satisfied with the regulatory buffers that have been put in place to ensure that you still stay in business?
I haven't seen any regulatory buffer yet.
Stabilization fund?
We haven't seen the rules of disbursing the stabilization fund. Yeah. So if I come and tell you that my 400 minimum capital is gone, can I get 400 into my organization called some kind of equity for X number of years to get out of it? That's one. So we need to understand, what that stabilization buffer is about. It's about 15 billion, right? It's 15 billion. Let's say 10 banks are wiped off, zero. They have no capital. So if you were to give 400 million, which is the minimum capital now, to banks in a kind of quasi-equity position for them to continue. 10 banks times 400, that's 4 billion. So you still have an extra 11 billion left in the stabilization fund. So today, and all of that. And also, if because I'm not collecting my principal and coupons on time, my liquidity is constrained, and I need to fall back on that fund for liquidity. So again, we still need to understand how that stabilization fund will be. If it allows equity buffer, fine. Is it only liquidity? But liquidity is when you have the capital to continue to be in business, and then you are constrained with mismatched withdrawals and receivables, and the receivables are largely not new customer deposits but loan repayments. You get what I'm saying?
Yeah.
Then you can go and say, look, ordinarily I would have been able to pay this, but because you have not paid me and I can do the maths, I'm shorting 100 million. Can you give me 100 million? So we still need to understand how that liquidity buffer will be. But primarily, if the risk profiling is going to wipe off the equity of banks, again, 15 billion, it means you can ideally recapitalize how many banks at full capitalization of 400 million. How many banks can recapitalize?
That's
do the math. Yeah.
There are proposals that the accounting framework should be reviewed as well, and all the rest for these commercial banks. When all those things are put on the table today, would that convince you as a shareholder?
No, look, you should see this accounting things that we are talking about. We have to be very careful. They are global standards, and especially for most of the banks, they are audited by the Big Four, and the Big Four will not tinker with their global standards to satisfy us. Because you're in a crisis. Well, it depends. When you're in a crisis, show that you're in a crisis. Don't whitewash it. That's what I said. If we actually deal with this problem, understanding how we got there and say never again, then it will be a positive turning. But if we use accounting and all sorts of trickery or financial engineering to paper over it and not solve the fundamental problem, the veneer will peel off again. So, as I said, as for the Bank of Ghana, they have their minimum, they have their minimum risk lines, but they knew that the economy is always volatile. So look, let me build in a buffer. They can actually pull back the buffer, but they will not pierce their minimum. Now, so that's done. What else can we do? If the main data is not playing ball, I don't know.
Interesting, Mr. Andani. I've listened to you so much, and for me, I form one conclusion that what has been presented is still not good enough. Let the creditor, government, should up its game to protect all these banks.
Absolutely. They have to. That's what I'm saying. For me, let's retain the long-term credibility. And the long-term credibility is government doing what is right. Protect the institutions, protect the depositors in a very responsible way.
Government is looking at January 31. I mean, some are saying that the process is being rushed. If this thing that has been put on the table is not good enough, do we have that much time to negotiate a better deal?
I don't know what they know. I honestly don't know what I know. They know, but if I look at that release from the bank, from the agreement that they with the Association of Bankers, it still leaves a lot of decisions at the door of the banks and shareholders. And to the extent that, as I said, if my capital is wiped off and I say, look, this capital is wiped off, I need 400 million from you because I had put my 600 million there as minimum capital. Your actions have wiped me off. Would you give me that 400 million minimum capital from the stabilization fund? If the answer is no, then of course you don't move forward. But as I said, we're only talking, 6 days from today? Yeah. So they know things I don't know. But I just know that whatever it is, let's retain the long-term credibility of this government, of this country. Let's not implode the financial institutions. In fact, let's not damage the long-term confidence of our
Mr. Andani, knowing Mr. Andani, I know you actually know a lot. But I get from you that if you sit in that boardroom of shareholders, you vote vehemently against this thing and go back and get a better. This is PM Express Business Edition as we engage Mr. Alhassan Andani, a banker, but once a banker, always a banker, getting his thoughts on this domestic debt exchange program and the impact on the banking sector and even businesses as well. This is PM Express Business Edition. We'll take a short break and we'll be right back. Welcome back to PM Express Business Edition as we talk about the domestic debt exchange program and the banking sector. We'll also be looking into the economy at large and the IMF program, and going forward, how do we maintain or ensure that confidence is not destroyed at all in the banking space and maybe even the economy as well for those small businesses out there. And Mr. Alhassan Andani is a banker, former president of the Ghana Association of Banks. He's into private sector right now. He's the chief of Pishigu. I hope I got the name right. I struggle to do this.
No,
so I want to come back again to the banking sector. And again, just mirroring these things to you because of concerns out there. Recently, there was an issue about these cocoa bills, and Bank of Ghana raised an issue about the fact that in terms of the agreement reached with these banks, it was just meant for institutional commercial banks to hold in it. And I cite this example again, coupled with the subprime mortgage and how banks were trying to be profitable. Again, there is an issue with the creditor here, and I will not dispute the fact being government. But some, again, will come back and blame the commercial banks, sometimes about greed and all the rest in terms of what we are here today. For instance, if the Bank of Ghana's agreement was that do not sell these papers to retail investors, some of the banks went ahead to do that. Some are saying that we are in the challenge that we are here today in terms of the exposure of some of these banks, because maybe some of these banks always want to be innovative, get ahead of the regulator, the market, and I don't know, linking it to the subprime mortgage issue in the US, even a well-regulated market. People have raised concerns with some of the commercial banks and how they've gone about their dealings and all the rest.
First of all, let's not miss it. What is the credit rating of a cocoa bill? That's what we start.
But looking at the challenges that
for a very long time, I've been in 14 cocoa board syndications, 14 international syndications as a lead player, you know, and I always said, how come that cocoa board has a better credit risk than the government of Ghana, which owns it 100%? I was asked that. And it was simple because, of course, because they sold cocoa in US dollars, which was externalized, and the borrowers sat around the money before it comes into Ghana. So cocoa board borrowed sometimes at best rates. I mean, 67 basis points was the highest I saw in a very long run. Otherwise, they were borrowing at 15, 25, 30 basis points above liable. When Ghana government itself was borrowing at 8 above liable, 7 above liable. Think about it. So cocoa board and cocoa bills, that's a kind of risk instrument you don't want any debt on. And we should have done everything possible to prevent that. Not who bought it and who didn't buy it. It wasn't a weekly package deal. The subprime you were talking about was a lot of rotten debt hidden into, if you want to call it a credit package. So when you started to unpack, this is a very credible institution that, as I said, in the international markets was rated better than the Ghana government. So if they have a bond and the bank bought it, and you even had clients who wanted very safe bonds, and you recommended it to them to buy, really, did you do anything wrong? So let's not divert the issue. What has happened to hurt the credibility of cocoa board or the cocoa bills, which was really, really highly rated? That's where we should be looking at.
Developments like this again bring about the confidence issues again. And again, I use this expression of spending your entire life in this industry. And again, are you worried when some of these things happen?
I'm extremely worried. So for example, look, this is a very small global village. Whatever happens in this country, in the next minute, it's on the global wires. And Cocoa Board has done its business. As I said, I've been in 14 direct cocoa board syndications. In fact, I was in the pack that signed the first one when the President Ajay Kufuor was president. And it's always attracted 25 to 30 of the best international banks to participate. They are watching this development and wondering, and what will happen to us, if we don't patch it up quickly before going back to the market for the next round of cocoa borrowings. So those are the kind of long-term things that we should keep in focus whilst we deal with this restructuring and all the financial implications of the things that are erupting.
Do you think that going forward, regulation as well for this year should change, because this challenge was not as a result of Andani Bank's reckless credit extension and lack of prudent governance and all the rest. And it is a must that the regulator has to review the way things are done when it comes to supervision, banking laws and all that, because I was not the cause of this problem. It is the biggest creditor that has brought this challenge onto all of us.
Yes, so the issue is not banking supervision. Banking supervision helped to resolve the banks how many years ago? 3 or 4 years ago? Yeah, that's what it did. That was his job. How could the supervisor get up one day and say that our best rated paper, which is sovereign paper, is going to be non-performing? Well, we did actually see the international rating agencies who had, if we say, the global standard and compass to do it, actually do it. And we saw it coming. So why didn't you take the right measures to halt it before it got to where we are? So it's always about us having an adult conversation and saying, how did we get it so wrong? What can we do to fix it? And fix it. Just not talk about it, fix it. So again, this year, whilst we're actually looking to default on international and domestic debts, we still presented a budget with a huge deficit in it. Think about it. Are we, would you do that? If it was just your paycheck, and there are 30 people outside the door waiting for you to pay 10,000 cedis and your salary is 2,000, and then your wife is still in the room to take your 2,000 with a market list of 4,000 cedis to add another debtor to the back of the door. That's what we do. And I'm saying, let's stop it. We don't need any young chap who hasn't done 5 years in banking as part of an IMF team to come and tell us this. We've got our own domestic IMF people. We've got, people who've worked with IMF and retired and they're here. We've got bankers who've retired and they're here. We've got economists. We've got people who have this. Have we assembled our own domestic team, to say, why are we getting it wrong? And take their word and get it done. Now we're waiting for some, group of people to come and tell us what we know. For me, that's where that long-term credibility is being lost. That's where the entire credibility of this country. But if the external market, capital market, our external partners saw that we have assembled a credible domestic team to deal with this. Look at the optics. If the President, John Mahama, and President Akufo-Addo were sitting, with two top economists having a conversation about, because this is not about a 4-year event. It's about the life of this country. Look at the optical impact. Have we done that yet? Have we actually put your Polacos, have you put all your the former workers at the World Bank together to say, in open, to debate it? People like us, as I said, we've dealt with.
Do you think that we should be doing that now?
We should be doing that now. We should
domestic
have done that.
Engagement is not too late, some will say.
No, it's not. Let's put together our own domestic IMF team, probably higher caliber team, before somebody else comes to tell us that. It's for people like us who work very closely with these international organizations and know the caliber of people who come in. With due respect, there are people in this country who have 3-4 times that experience, who are sitting and wanted to do it pro bono for the country because we want to save this country.
Are these people prepared to offer the help? Because some are.
How much are you paying me for this conversation?
Nothing.
Nothing. I'm doing it because for the love of my country. I'm doing it because I need a critical industry to get credibility. I need it so that my customers will know that their business was being looked after very properly by banks. That's why I'm doing it.
It's good.
And I'm saying that there are a lot more people better qualified than I am. But first and foremost, let's be seen to have our own domestic IMF team. These announcements, and it's not helping.
That could help manage the situation and deal with the confidence issue as well.
And then let's say that we had who are the key contestants to the political power. Nanado, Mr. John Mahama, who are the last 3 finance ministers from both sides, who were the last few governors, who were the last few managing directors, who are the few large corporate directors, these things. Put them in a room. I mean, that's our first line IMF team. And when they come and we've divulged everything and we make recommendations, even they, when they are coming, they will have respect for us.
Some are saying that it is always the political will. I mean, accounting 101, finance 101, economics 101 tells us that if you are spending more than what you bring in, obviously we knew these problems will come up. And some are saying that, do we have that will to implement some of these tough measures? And I'll look into Andani Feeders as my MD and tell him that, listen, I'm sorry, we will not approve this credit line to this business because they cannot honor the loan when the time is due. And those are the real challenges.
Yeah, and probably that is where you have to begin to see where fiscal responsibility and the checks and balances are. You know, so first and foremost, the schedule officers, the technical people who advise ministers should tell them that these things you have packed in cannot be achieved. Then we have another line of defense, which is Parliament, which is supposed to be representatives of the entire people, of all the people of Ghana. They should say, this budget we put together, we can fund it. And the other thing is just the way we have auctioned our sovereignty. So if you look at it, we seem to have auctioned our sovereignty. So people approve budget because every budget number is somebody's project. Mm-hmm. Do you understand? Every budget number is somebody's project. So irrespective of what is happening in the country, put it in the budget. That's my project. And if I have the political gravitas, it's in the budget, whether it's required or not. Because we've auctioned sovereignty. Let's not auction sovereignty. Let's go back and just do what is right.
I've spoken to some people and they argue that, listen, this is something that is going to impact on the country 10 years, 15 years, 20 years. We shouldn't use trying to get IMF program quickly to rush this thing through. Some are saying that, listen, this debt exchange program, let's extend the deadline for more engagement and more inclusion and more proposals to get a better deal for the banks, the pensioners, and all the rest. What do you say to this?
I agree. IMF is part of the global democratic institutional infrastructure. IMF is part of the global democratic institutional infrastructure, part of them. Ghana is a huge success in democracy if it comes to Africa. We have to be able to have a reasonable conversation with them and not implode the country. And I believe they know that. There are countries that superintend the IMF, very powerful in the US and our EU partners and all of that. So I think that if we came, because IMF would not be sitting in North Korea. Would they be in North Korea? Yeah. Would they be probably in Afghanistan now? Yeah, so there are some countries that, you know, the global world or global financial system don't think they are part of the democracy. So IMF would never go there. World Bank would never go there. We are part of that. So let's put that together. Let's put that commercial, that institutional framework together and say, if we do what we're doing, we'll not have a country Ghana. We'll not have an orderly country. Can we find some other solution? We will always find some other solution.
This January 31st deadline should be extended for more better engagement.
I don't know what they know.
No, but I'm just saying that because some are saying that some of the deals that have been proposed, they are still pushing for some amendment. And let's even look at the commercial bank sector as well. And so some are saying that let's review, let's push a little bit more engagement to ensure that we get a better domestic debt exchange deal for the banks and all the other stakeholders.
So my elder brother told me that when you have adults asking themselves 2 + 2, adults asking themselves 2 + 2, that's the question you're asking. So that's what I'm saying. I don't know what they know, because there's always a plan A, plan B. If I read that joint communique that came out from the Bank of Ghana and Association, Minister of Finance and Association of Bankers, it still leaves a lot of room for, but maybe as the banks were talking, they were already engaged with their boards and shareholders. Maybe. So again, that's why I don't know what they don't know. Yeah. So probably what I still see work to be done. Maybe, of course, the Association of Bankers would not have been probably closing in unless their member banks were, of course, feeding back, and they will not feed back things that they haven't thrown into their governance structures within their own organization. So I don't know what they know and what's the plan B to the 31st. But I just know that we could probably Yeah, certainly I would have liked to see a domestic IMF team, which we have, or equivalent team, which we have. I probably would have liked to see other ways of solving, a power way of discussing rather than... I always, for those friends of mine who have discussed this with me, I've said it's like a landlord is holding a grenade with a pin off, and instead of dropping it outside, you are running into the house for it to explode. That's how I see it.
But the economists will say that all other things, holding all these things constant, holding all these variables constant, that there are no other avenues for these banks to still flesh out and deal with some of these problems. You think that for now, if I hold all these things constant, there should be a room to extend this deadline for more fine-tuning of these concerns?
You are probably crediting me with the framework that government have that I don't have. Okay. I'm just looking at, what other people who are not part of this problem are now being asked to do in a very short period of time. Private bondholders who have never been part of this. The banks and the way they've run their book, according to Bank of Ghana rules and regulations, they've been, no Bank of Ghana is not faulting any of them for doing anything wrong. So, and they're now being asked to rearrange themselves because of what somebody else has done in a time frame that they really are determining. So I'm saying, and they have been talking, so I can only tell you what I am saying now, which is what I know.
Mr. Andani, in terms of those golden nuggets, what should commercial banks be doing now for those we pray that everyone survive? For a very interesting year like this, what should be the module going forward to ensure that at least you maintain the little that is left?
100 years from now, every bank will need its customers. Do whatever you can to keep your customers happy. Give them the confidence that the money that they've left with you, they can come back for it freely and bring it back to you freely. That's number one. That's the safety of their deposits and to help you carry out your business transactions. With technology and everything, well-trained people, I think banks should keep that customer base happy. Whether 100 years down the line, we need those customers. Number two is we have to have a license to operate. And the license to operate is to meet minimum capital standards and all of that. Ensure that you have the minimum capital. We are in a very rattled market. Be careful the risk you take for revenue. Revenue and profitability should be the backbench now. Yeah, you should put revenue and profitability profitability in the backbench. Top is customer confidence. Just make sure that you run your system, that you can still keep your customers and do their both internal and domestic payments, external and domestic payments. Of course, there's the FX element which banks don't control. But the central plank of it is protect capital, make sure that you have a capital and a license to do business.
What about the Ghanaian business as well? For the multinationals, some are saying that you have done the scenarios and the extrapolations and putting the shocks and all those things in place. But for that private businessman out there, what is the advice to him? Because there are some who still want to close their eyes to the challenge and accuse banks that they are wicked, they are lazy and all the rest. What is the advice to those businessmen out there in 2023, and what should be the level of engagement between you and your bank and the commercial banks when it comes to credit support and all those things?
In fact, the banks are not necessarily lending houses. The banks are also areas of great expertise. So it is years like this that banks need to take their expertise to their clients, to sit down, really look at their budgets, really look at their strategies, what can be kept on care and maintenance, what are the tactical growth. So banks don't only give, especially my kind of banking, we don't only give money. We give a lot of business and strategy advice. So I would say that this is the year that, more than any other, that banks should take that kind of strategic financial planning, business module and expertise to their clients to help them protect their businesses, hibernate what they have to hibernate, do the strategic growth, cut where they have to cut, and keep alive until things improve.
I see. Yeah. Let's come to the bigger economy as well. For you said about never again and all the rest. Do you think that we are taking the necessary measures that we can't be assured about the never again?
No, I don't think so. I still feel very depressed that we brought ourselves to both domestic and external debt default and still presented a budget that showed a huge deficit. It just saddens you. It just saddens you. We should go back to that budget and say, what should I take out? What should I put on care and maintenance? What should I stop? That's just where we need to do. We're a country. We're not going to die off in 5 years and 10 years. There are things we can stop. There are things we can put on care and maintenance. And there are things we should just not do. That's on the expenditure side. And then turn on the revenue side and be very honest around how we collect and manage revenue. Create that room yourself. But we haven't even actually tried to create a room ourselves. We were signing up a debt exchange program and still went to Parliament with expenditure here and revenue here. Please.
On the fiscal side, what can be done to deal with the confidence issue as well? Because some are saying that confidence is at its low.
That is to go back to the fiscal, to go back to that expenditure line and say to Ghanaians, these are the expenditure line, these are the items, this is our revenue line, we can afford it. Have the courage to pull it out. That's huge confidence booster to all Ghanaians.
The Ghana city, I know, it's been one of your babies and your this. What should we be doing now?
The Ghana city is a consequence of our work, not talk. The Ghana city is consequence of work and not talking. Do you understand?
Yeah.
So you borrow 100 cedis, go and plow it back and generate 1,000 cedis. The city is strong. You want your total requirement for foreign exchange to keep, because we're in a global village. Your total exchange foreign exchange requirement is 1,000. Get out there and work and generate $1,500. Then your city will be strong. But sometimes we just reduce the city to political banter. No. I always say the city is a measure of how hard we work in this country, how strategic we are in our consumption and production processes. I'm sitting here and thinking, where would the FX come from? With Cocoa Board in the cocoa bills defaulting and Galamsey taking down cocoa trees and all of that. Where is that going to come from next? And that's where foreign exchange is coming from. And one of the saddest things which has got us to where we are is to go to the debt capital market to borrow money to come and manage exchange rate. It's not done.
We are now looking forward badly to an IMF coming with a balance of payment support.
To manage exchange rate?
To help us build our balance of payment support. Some are saying that if this support doesn't come in by April, we are in deep problem.
I want you to borrow $1 billion, paying over 10 years, and over the 10 years, the $1 billion generates in real currency $4 billion. But if you borrow $2 billion and come to manage the exchange requirements in this country for 12 months, and to go back again and borrow to come and manage exchange requirements for 12 months, please.
So Nani, finally, I mean, the Monetary Policy Committee is meeting as well. Policy rate, looking at all this, should policy rate go up again to help in the confidence building, or what should they do?
Look, under normal circumstances, policy rate would have just been based on your local variables. Yeah. But we're not in normal circumstances. We have a significant external influence now. We've put our fortunes on a program with the IMF. So if that doesn't come, and I will sit down there, I can't. It's a tough job, and I pray for my friends, my two brothers and sisters there every day.
So
it's a tough.
You think it should go up?
It's a tough call. It's a tough. And look, increasing policy rate really is not, or interest rate is neither here nor there. Because what are you trying to achieve? Increase domestic production? Because nobody can borrow at 40% and be productive. Or stop people using CD. I'm trying, so when you're talking policy rates, for what purpose am I setting this policy rate?
Confidence building.
For
those who bought government bonds and papers, how do you deal with the offset between the inflation loss and again being compensated?
Again, that's all financial engineering. I'm talking about the real purpose for policy rate. how does it generate economic activity rather than just the optics and engineering? Because engineering you're just clever and going nowhere.
So for engineering, it should go up.
Yeah. Well, no. Look. I'm saying I honestly don't know. If you ask me, what we need now is encourage domestic production.
And that means it should go down.
I'm saying, if you ask me, what we really need now is to put our people to work, encourage domestic production. I don't think an escalator exchange rate necessarily encourages that, but they may have other...
A hiking policy rate would not encourage that.
I'm saying, for me, encouraging domestic production. We should do targeted policies to ensure we have sufficient food, at least food.
Andani, I thank you so much for your time. I appreciate it so much. Anytime I have an opportunity to engage you on the economy, banking sector, and other development. Thank you so much, Andani, Chief of Pishigu. I hope I've got the name right. Former president of the Organization of Banks, the Economy, Banks, Domestic Debt Exchange Program, IMF. I know the debate will still continue in your offices and your homes as to how we can better manage the current challenges that we're going through in the banking space and the larger economy. My name is George Wiafe. Have a good day.